Stocks ending slightly higher just ahead of today's market close. My next guest is finding pockets of opportunity amid the ongoing volatility. Let's bring in Bill Nygren, Oakmark Funds partner and CIO of U.S. Equities. Bill, always good to see you.
Thanks for having me, Mike.
Sure thing. Now, I know your approach is you're looking over a multi-year time period. You want to hold, businesses that are going to do well in a lot of environments. But are you working under any kind of an assumption that we're going to have to weather a recession or an earnings downturn as you try to model out how your companies are going to do?
Well, at Oakmark, we don't think we have any special insights that others don't have as to what the economy is likely to do, or for that matter, where the stock market's likely to go in the next couple of months. I find it kind of humorous how every time after we go through a decent decline, as we've had this year, you get people coming out betting that the market's going to go down a lot farther. If you look through history, the stock market goes up about 7 out of every 10 years. And there's just so much emphasis placed on trying to figure out which 3 years you shouldn't be in. We don't waste our time with that. Over a long time period, we expect equities to continue being the asset class of choice as they have been for the past 100 years.
Now, when the market does go down, as it has this year, clearly, presumably there's more opportunities to find things at a better value than they had been before. And I'm particularly interested in financials, an area that you've kind of fished in a lot over the years. But now, when you see a lot of these cross currents, both the companies seem like they're in better shape this cycle, and on the other hand, everyone's worried about the credit experience we're going to be in for next year. What does look good to you in that area?
Well, one of the names that we have a large holding in is Ally Financial. The stock sells at about 5 times estimated earnings, and almost all of that isn't paid back to shareholders in dividends, which is about a 4% yield, is going to share repurchase. The company is expected to reduce its share base about 15% this year. They're one of the largest auto lenders. When consumers do get stressed, which there's no sign yet that they are, but when they do get stressed, the auto is one of the last bills that they stop paying because they need to get to work. And they'll stop paying on their houses and their credit cards before they stop paying on auto loans. We think the company's very well positioned. It's got a lot of capital. Berkshire Hathaway just reported a large position. And if you look back to the last crisis when some of the auto lenders did poorly, largely it was because of one of 2 reasons. They were either overextended on lease obligations, and Ally has almost none of that today, or they had trouble rolling over their funding. They were generally set up back then so that they were based on market funding. And today, a company like Ally, it's one of the leading online banks, so it's deposit-based funded, which puts them in a much more secure footing than they had in the last recession.
I'm interested that you do have the big position in Ally at the same time that you like GM. Clearly Ally used to be, GM Financial, but that's a separate issue. More to me, it's about the fact that you seem to have confidence in the auto cycle in general.
Well, I don't think it's specific confidence in the auto cycle. For whatever reason, investors seem to be running away from almost anything auto-related that isn't Tesla. If you look at a company like GM, it sells at about 6 times expected earnings. They are making one of the more rapid shifts to EVs of the traditional companies, designing theirs from the ground up, targeting about 2 million EVs within the next 3 years. That's twice Tesla's current capacity, and Tesla's market cap today is 16 times that of GM. And if you look at GM's non-auto assets like Cruise, Lyft, and their financial subsidiary, you could arguably say you're getting those businesses alone justify the price that GM is selling for. So we think it's a very attractive company today on its own merits.